A recent Gallup poll shows Americans are buying stocks at the highest rate in 15 years. 61% of people say they are investing in the stock market, whether that be through individual stocks, mutual funds, an IRA, or 401k. That's a return to the level of stock ownership we saw before the 2008 recession hit. But whether you're looking to get started or expand your current investment portfolio, exchange-traded funds are becoming one of the more popular forms of playing the market. Think of ETFs as a basket of like investments that allow you to build a diversified portfolio and don't require a lot of personal management. I can get behind that. Morning Rush contributor and financial consultant ErikaBlair McGrew is here now to discuss ETFs and the best ways to get started with them. Thanks for coming on the show. As always, it can be a little daunting to get into this investment game. I know we're getting into the weeds a little bit here. Talk about ETFs and how they differ from mutual funds. Sure.
So as you said, ETFs are exchange traded funds, and they are a basket of securities instead of just a single stock, right? And mutual funds are the same thing. They're a basket of securities instead of an individual stock or bond. But the major difference is mutual funds have a professional manager managing that basket, right? So you're going to pay a little bit more. Whereas ETFs, they don't have a manager. They're what calls passive investments, meaning that they follow some type of index, and so they're totally transparent and they're easier to get into and cost a little bit less.
That's the big thing. The fees are lower because it's hands off, right?
Yes, the fees are lower because, like I said, it's passive investment. You can see what holdings are in your exchange traded fund. With a mutual fund, you have the professional manager there trying to beat the market or beat some type of benchmark.
How do you know, if you're unfamiliar with the investing world, how would you know which one is best for you?
So I always tell people, so exchange traded funds or ETFs, they're going to trade like a stock. So if you're a person who wants to go in and buy a share of an ETF or buy 10 shares of an ETF, then that's going to be the best investment for you. But if you're a person who says that I want to just go ahead and put $50 away a month or $100 away a month, then mutual funds are going to be better for you because they allow you to do just a money allocation instead of actually buying a whole share.
And not to dumb this down too much, but whether it's EFTs or ETFs or mutual funds, this is much different from buying an individual stock, right?
Absolutely. So exchange traded funds and mutual funds are going to give you automatic diversification. And that is what is most important when you're investing in the stock market. You don't want to put all your eggs in one basket. So those ETFs and mutual funds are going to give you diversification because they're usually invested in different sectors in different parts of the market instead of you just being in one stock.
And by being diversified, I'm thinking like of a 401k or something like that. It's not as risky as, say, investing in Tesla or investing in Apple, something like that.
Yes, so when you're invested in an individual stock, then your portfolio is at the whim of that stock. So if that stock is way up, then your portfolio is way up. If that stock is way down, then your portfolio is way down. But if you're in an exchange traded fund, then you have a basket of stocks and they're all moving differently so that you get less risk, like you said.
If you're new to the game, what's an example of an ETF or a mutual fund? How do I even know what I'm investing in?
So you can definitely go to any broker or website and just Google ETFs, but one is the SPY, that's an ETF that follows the S&P 500, or you can do an ETF named the Dow, which follows the Dow 30. So those are things that you can do.
Generally speaking, we've talked about this before when you've come on Morning Rush, the importance of savings, whether it be through an emergency account or a mutual fund or a 401k. Talk about what that does for you, what the security blanket that provides, and where to initially funnel that money. I know every person's situation is different, but what's your best advice for someone who's just looking to build up a stockpile?
If you're looking to build up a stockpile, then you want to put it in a high yield savings account, right? Because that's going to also grow your money. You always want your money working for you. So there's several different high yield savings accounts that you can choose from. They're online accounts, and sometimes your major banks have high yield savings accounts as well. If you put your money there, then it's going to go faster than just sitting in a regular checking account.
And if your employer offers a 401k and a match, make sure you do it, right?
I think I talked about that the last time I was here. Yes, definitely. That is free money. Never pass up free money. So you always want to contribute up to the match in the 401k because your money automatically doubles. You can't get a quicker return than that.
It's a fascinating conversation. I didn't even know there are ETFs, mutual funds. There's so much to wrap your head around with this, but it's good to pick one of them anyway.
Yes.
For sure.
Yes.
Erika, thank you so much for your time. Appreciate you coming on the show.
All right, thank you.